All right, guys, welcome back to the Independent Investor Channel studio. Hope everybody's having a great day. When we talk dividends, there's so many great opportunities by seeking out dividend income. And I know it's alluring for a lot of new investors who don't know a whole lot about the stock market, who hear about dividends, and it really is one of the very few guarantees in the stock market. Typically, a dividend is a very safe way of investing and seeking out that small stipend for owning a stock. But what if there was a separate, a different alternative way of investing in dividends as opposed to investing in single stock? I think that too many people, especially beginning investors, get caught up in the hype of thinking that they have to build a dividend portfolio. And in this video, I'm going to identify the alternative strategy that I use to seek out my dividend income. We're going to be covering the VYM, which is my favorite dividend paying ETF. And I have this housed in my self-directed Roth IRA account, which allows me the tax protection, and it allows me exposure to over 400 companies as opposed to trying to manufacture a portfolio from scratch. This is the largest holding in my Roth IRA, and you guys are going to really benefit from this. You don't always have to seek out your exposure through individual or single stocks. And I think that can be a real dangerous maneuver for a lot of investors, as stock pickers typically will underperform the market. Now, if you're seeking dividend income, this ETF pays over 3% of a dividend, okay? And so you have to kind of question yourself, if you're looking at the single stock exposure and you're going for a dividend north of 3%, the difference between the two can really be your determining factor to say, look, do I want to take the diversified path by owning the ETF, or do I want to push my luck trying to piece together a portfolio of single stocks? And I know this drums up a nice conversation. They're both great options. I really do enjoy the dividend growth investing philosophy. I just want to make sure that investors are being honest with themselves with regard to their year-over-year performance and whether or not it's a program that really is in line with their personal risk tolerance. So with that, guys, I'm going to kick you into my Roth IRA. We're going to cover this ETF portfolio that I have there. I've offered this portfolio through M1 Finance. It's a great way to display these holdings within the portfolio. I believe there's only 3 holdings in this offering, so you don't need to own a whole lot of these ETFs to get your maximum benefit out of them. All you really have to do is own them for the long term, fund them, and enjoy the diversified appreciation as it comes to you over time, guys. So with that, I'll drop you into the M1 Finance account. We'll do a quick review over my dividend ETF portfolio. Enjoy, guys. All right, guys, keeping with a theme here of really trying to offer transparency on the baseline passive aspects of my portfolio. I've already rolled this out for the other Roth IRA. I want to roll it out for the other Roth IRA. So this is the second account. This is actually my personal account. So again, I will share these links with you guys in the description of these videos. You can look at them and see where I've sought my performance, how the ETFs have performed over time, and what I'm looking to get in this strategy. So if we back test this portfolio, 35.73 of rendering here, so a little bit less than had I just invested in the S&P 500. I'll explain a little bit why that's a touch more acceptable in this portfolio because of my goal being a little bit more dividend driven in my portfolio as opposed to my spouse's portfolio. So the 35.73, divide that over the last 5 years, and we're looking at about 7.146 performance. So again, as a passive investor, you're looking to make that solid average rate of return going forward to make sure that you're achieving that compounding growth into the future. So this portfolio is doing exactly what it's supposed to do. Now, over the last 5 years, this 35.73 does not include this dividend yield here of 2.769. So close to a 3% yield on this account. I do so holding 6 actual ETFs in this. This is my passive baseline. All Vanguard products, which is my preferred offering. The bulk of the holdings, almost half here in VYM, which is just a little over 400 of the best dividend companies, large cap in the S&P 500 in this VYM. And then to complement that, we've got 14% in the international dividends. So this is over a 4% yielder. So this really helps boost up that dividend income within here. Vanguard's VNQ, so that's the first of the spiders that I've got here for the real estate REIT, 13% there. This is the value small cap ETF, so VBR at 11%. And then emerging markets in this at 9%, and then finally VPU. So you can see how I've strategically used a couple of specialty ETFs, utilities, and REITs, respectively, in this portfolio. The rest of them are a little bit larger ETFs focused on a specific goal: domestic dividend, international dividend here, emerging markets, and then small cap value exposure, for example, in these other ETFs. So this is my baseline in my account, and this is aimed at providing that passive diversified base in this account. These are products that you really want to buy and just hold forever. You really never want to sell these. You want to add to them when they do come back and give you a little bit of a buying opportunity. You can see here, this one crept below 110 here in the dip back in, looks like 2019. So that would have been a good buying opportunity to take a look at this. But like I said, guys, I'm going to share this pie with you guys. You're going to be able to review and see how I seek out my exposure. This represents about $36,749 within my account. I do have some single stock exposure within my account as well. And then I also invest in the S&P 500 index fund in my 401k. It's the TSP for you guys that cover me pretty often. So this is kind of why I justify putting these Vanguard products in here with a little bit better emphasis, or a little bit more of a focus on dividends in this portfolio. That's why I'm making about 1% more in dividend yield on this account as opposed to my spouse's account. But the diversified year-over-year average rate of return here, I want to continue to keep that at around 7 to 10%. We're a little bit on the low end of that spectrum, whereas my spouse is making a little over 10% year-over-year average. Not to be scoffed at. Nothing boring about that, guys. That'll get it done when you're talking about really setting the stage for accelerated compounding growth into the future. As a passive investor, you really cannot underscore the importance of the buy and hold philosophy. And you can do those knowing that these are set up, diversified, and set up to fund on a dollar cost average. I typically try to strategically buy these. So I'm actually looking at these large drawdowns in these ETFs. These are buying opportunities as far as I'm concerned. So I'll look at these larger drawdowns. So we would have had one here, it looks like, and you take a strategic shot at it. Some you win, some you don't. But these are really easy to just buy and hold. And these are for those investors that really aren't interested in single stock opportunity. Place these assets into a self-directed Roth IRA account to allow these assets that I've just outlined for you to grow unobstructed over time, which is really the secret on the Independent Investor channel. I've really found no other way of investing that appeals to the masses the way this style of investing appeals to. And I know there's a lot of folks out there that are extremely interested in the single stock opportunity, which can be very lucrative. It can also be very humbling. So I would encourage each and every one of you guys, whatever strategy you're looking to deploy, Make sure that you're honest with your own capability. Make sure that you're honest with the time that you really want to sit in front of a computer and research stock, because for a lot of people, that's really just not feasible. And they're looking for a way that they can put some good money away in the best assets that exist on the market in a diversified manner and make that 7 to 10% rate of return over the course of their life. Because for those savvy investors that understand that seeking out that compounding growth later on in life is super, super important, this is your wheelhouse. This is where you can get that done. And this is why I roll out these videos to you guys to identify the passive income investing base in my portfolio and the other portfolio that I hold. So with that, guys, we'll wrap it up. I'll kick you back to YouTube, close out the video. Thank you so much. All right, guys, rock on. So we've come out of the M1 platform. We're using M1 to demonstrate this baseline in my Roth IRA account. Now, this isn't my actual account. I used M1 Finance and the mock portfolio pies, that of which I'm going to share in the description of this video and in the comments section specifically, so you guys can look at these actual holdings for yourself if you don't remember it from the video. But I do contend that this is an excellent way of seeking that 3% dividend and giving yourself a good chance to get some capital appreciation by holding an ETF that exposes you to the 400 best dividend payers on the market. You know, if you're trying to pick the best 20 or 30, good luck. Okay, I wish everybody the best luck, but a lot of people just don't have the time to do the research necessary to put yourself even in the driver's seat or give yourself that chance to maybe outperform the market. And I think just meeting the market or achieving that 7 to 10% rate of return is often overlooked with the allure of trying to build a dividend portfolio. And I really think people are underestimating how difficult that actually is when you're starting from scratch. So guys, if it's your first time to the message, hit the subscribe button for us. Leave your comments at the bottom of the video. We'll see you in the next one, and always good luck in your investment future.